So you know that everyone answered that black money, because you know that from name only, it is look like so fascinating, na? Name, it's a Black Money Act. It means like, sir, there will be a lots in this act and all. So we'll start with the black money. Okay. So guys, this topic we will complete today itself. Very simple topic. Black money. So Black Money Act. There is a Black Money Act 2015. And guys, earlier this topic was not part of the CA final. Only first time they have included this topic in the CA final. So first time they have included this topic in the CA final. Earlier it was not part of the CA final. So Black Money Act 2015. And guys, this topic will cover the 4 marks in your examination. 4 marks, 100% you will get the 4-mark question in your examination. And we will try to complete this topic within 1.5 hours. So 1.5 hours means 90 minutes, and this 90 minutes will give you the 4 marks. And ICI has covered 5 questions in their module. That all 5 questions we will discuss today in the classroom itself. Okay. So Black Money Act, 4 marks weightage in examination. And short you will get the question, because first time they included this topic in the CA final. Earlier this was not part of the CA final syllabus. First time they have included Black Money Act. Now first point is why there is a need of Black Money Act 2015, because now in this topic we are not going to discuss the income tax. We are going to discuss the Black Money Act. Black Money Act is a separate act. This Black Money Act is basically passed by Parliament on the 26 May 2015. And guys, this Black Money Act 2015 is applicable to whole India, and this is applicable from assessment year 16-17. From assessment year 16-17 it is applicable, and this act is applicable to whole India. Whole India means including Jammu and Kashmir. Including Jammu and Kashmir. So Black Money Act is applicable for Jammu and Kashmir also from assessment year 16-17. Now what is the need of Black Money Act? If you remember, before 2014 election, there was in 2013, that time Congress was in the power. That time everyone is talking about the black money. Everyone is talking about the black money, black money, black money. And if you remember, then Narendra Modi ji told that time, okay, there is lots of black money outside India. Means Indian person deposited amount in the Swiss bank, as well as they are having the lots of asset outside India and all. So if we bring that black money in India, then every individual of India will get at least 15 lakh rupees in their account. So from that day, that 15 lakh rupees is, you know that everyone says that 15 lakh rupees. So that 15 lakh came from there. Because Modi ji told that India is having huge black money deposited outside India in foreign countries. Indians are having the bank account in the Swiss bank. They are having the account, they are having lots of asset outside India and all. So if that money came to India, then everyone will get at least 15 lakh rupees. Before 2014, if you remember Baba Ramdev, you know Baba Ramdev? So Baba Ramdev was talking about the black money and all. Every time Baba Ramdev says that black money, outside India, people park the black money, lots of black money through Hawala transaction. They acquired lots of asset and all outside India. So Baba Ramdev was also talking about black money earlier. But now Baba Ramdev says that in this biscuit, there is no maida. Okay. So इस बिस्कुट में मैदा नहीं है करके, ठीक है आजकल. इफ यू रिमेंबर द एड ऑफ द पतंजलि, सो बाबा रामदेव इज नाउ ऑलवेज सेइंग दैट कि इस बिस्कुट में, ही नेवर से बिस्किट आल्सो, ही से बिस्कुट, इस बिस्कुट में मैदा नहीं है करके, ठीक है. सो नाउ एवरीवन इज चेंज. सो फॉर दैट पर्पस, टू ब्रिंग दैट ब्लैक मनी फ्रॉम आउटसाइड इंडिया, आवर गवर्नमेंट, Modi government, they have passed one act that is called Black Money Act 2015. Now why this act is applicable, on which type of asset or income this act is applicable? So this act says that suppose if any resident person, this act is applicable only for resident person. This act is applicable only for resident person. Suppose if any resident person, all people focus here, if any resident person is having any undisclosed foreign income, or resident is having undisclosed foreign asset, undisclosed foreign income, or undisclosed foreign income and undisclosed foreign asset. Undisclosed foreign income is, suppose I am having the income from foreign, but I have not disclosed that. That is called undisclosed foreign income. An undisclosed foreign asset means I am holding some asset outside India. I am a beneficial owner of any asset outside India, but I have not disclosed that asset in my return of income. That is called undisclosed foreign asset. So guys, here they came with the one act that is called Black Money Act. And this Black Money Act is applicable only on the undisclosed foreign income or undisclosed foreign asset. Guys, if there is an undisclosed Indian income or Indian asset, then obviously they will deal with section 68, 69A, 69B, 69C. There are lots of sections. But for the foreign undisclosed income or foreign undisclosed asset, they have came with one new act that is called your Black Money Act 2015. And under this act, they have mentioned that whatever the foreign income and foreign asset, whatever the value today, on that value, you have to pay the tax at the rate 30%. Means suppose if income tax department catch that income or catch that asset, then you have to pay the tax at the rate 30%. Means there is a flat tax rate of 30%. There is no surcharge, no health and education cess, flat 30% is tax rate. But guys, you will say that 30%, sir, it's very simple now. Only 30% tax you have to pay. We have discussed that Indian black money, like Indian undisclosed that asset or investment, there was a 78% tax rate. And on 78%, there was 10% penalty also. So approx 85 point something percent. But guys, you know that here tax rate is only 30%. But guys, on this tax, there will be a 3 times penalty. 3 times penalty. So 3 times penalty means, in simple words, suppose 30% is your tax, and if you take the 3 times, it means 90% is your penalty. So in short, you have to pay the 120% to the government. In short, you have to pay the 120% to the government. So under this act, what is the tax rate? Tax rate is 30%, and 3 times of the tax is a penalty. Means whatever the tax amount on that, there is a multiply by 3 times. 3 times means total, you can say that here it is a 90%. So total 120% you have to pay to the government. For an example, suppose your undisclosed foreign income was 10 lakh. So on this 10 lakh rupees, if they catch that 10 lakh income, then on this 10 lakh, 3 lakh will be the tax. And guys, the 9 lakh will be the penalty. 9 lakh will be the penalty. So overall, you have to pay the 12 lakh rupees to the government. So your undisclosed foreign income was only 10 lakh, but here you have to pay the 12 lakh rupees to the government under the Black Money Act. So what I'm saying that this act is applicable only to the resident person, only to the resident person. And if resident person is having any undisclosed foreign income or undisclosed foreign asset, and income tax department get to know about that undisclosed foreign income or undisclosed foreign asset, then that person is liable to pay the 30% tax, along with that 3 times penalty also that person is required to pay. Now guys, try to understand. In case of the undisclosed foreign income, you have to pay the tax in the year in the year for which that income is relates. In simple word, for an example, suppose I am having some foreign income, undisclosed foreign income. I am having some dividend from USA. Suppose I am earning dividend from USA and I have not disclosed that dividend. Suppose for an example, $10,000 I have earned in the previous year 2021. $10,000 I have earned in the previous year 21-22. $10,000 suppose again I have earned in the previous year 22-23, and I have not disclosed this dividend. So this is undisclosed foreign income. It will be taxable in the respective year only. Respective year means this $10,000 will be taxable in the previous year 2021. This $10,000 will be taxable in the previous year 21-22. This $10,000 will be taxable in the previous year 22-23. So in simple word, undisclosed foreign income will be taxable in the respective year only. From respective year means the year for which that income belongs. But guys, if there is an undisclosed foreign asset, then asset will be chargeable to tax in the previous year in which it comes to the notice of the assessing officer. Means here, if there is an undisclosed foreign asset, then that will be chargeable to tax in the year in which it comes to the notice of the AO. Means for an example, suppose I have purchased one property in Dubai. So suppose this is one house property I have purchased in Dubai. Now I have purchased this property in Dubai on the 16th July 2022. So in the previous year in the previous 2012, for an example, I have purchased this property on the 16 July 2012, and that time I purchased this property for the 20 lakh rupees. 20 lakh rupees was cost. Now, and I have purchased on 16 July 2012, so I can say that the previous year 12-13, that was my purchase year. Now guys, I have not disclosed this property anywhere. But today, if assessing officer get to know about that, I am having property in Dubai. So suppose on the 10 December 2023, AO came to know that I am having the property in the Dubai. So what AO will do? AO will charge this income for the previous year 23-24. So what I have mentioned, in case of the undisclosed foreign asset, you have to pay the tax in the Black Money Act in the year in which it comes to the notice of the AO. In the year in which it comes to the notice of the AO. So here AO like got the information in previous year 23-24. So guys, it will be taxable in the previous year 23-24. But question is that, sir, tax will be charged on which value? Because you purchased in the 2012 at 20 lakh rupees and now must be value is higher. So suppose today value, guys, here you have to calculate the value on the valuation date. And valuation date will be FMV on valuation date. And guys, valuation date will be the 1st April of previous year. So our previous year is 23-24. So 23-24 1st April will be the 1st April 2023. And on 1st April 2023, suppose value of this property is a 80 lakh. Then you have to pay the tax on the 80 lakh. We will discuss about the valuation rules, but here value will be the 20 lakh rupees is the cost and NRV on the valuation date. Valuation date is the 1st April of previous year in which that asset is accessible for tax. And here guys, this was undisclosed and it will be charged to tax in the year in which it comes to the notice of the AO and AO notice in the 23-24. So here it is charged for the 23-24 and 23-24 1st April 2023. Whatever the FMV as on valuation date, that FMV or your actual cost, whichever is higher. This actual cost or your FMV, whichever is higher, that will be treated as the value of the asset. And on that, you have to pay the 30% tax and multiply by 3 times penalty also you have to pay on the tax. So on the tax, you have to pay the penalty 3 times. You got my point or not? Yes. So all people, pay attention. Again, I am discussing whatever I have discussed till now. So guys, Black Money Act 2015 examination, it will cover the 4-mark question. This is applicable from the assessment year 16-17. It is applicable to whole India, including Jammu and Kashmir. This act is applicable only for the resident person. And this act says that if you are having any undisclosed foreign income or undisclosed foreign asset, then on that you have to pay the tax at the rate 30%. Now, undisclosed foreign income will be taxable in the respective year. Income belongs to any year, it will be taxable in the respective year. But guys, undisclosed foreign asset will be taxable in the year in which it comes to the notice of the AO. And guys, in that year, 1st April of the previous year will be treated as your valuation date. And on that valuation date, whatever the NRV of that asset and actual cost of that asset, whichever is higher, that we will take as the value. And on that value, you have to pay the 30% tax and 3 times penalty you have to pay. Now guys, there may be possibility. Suppose this property I have acquired in Dubai in previous year 12-13 I have acquired. That time I was a resident, but suppose after 4-5 years I just left India and I shifted to Dubai only. Now in the current year I am non-resident, but the property I have acquired in Dubai, in that year I was a resident, but now I am a non-resident. So is Black Money Act is applicable or not? Because you are saying that this act is applicable only for resident person. Now in the current year 23-24 I am a non-resident, but in the year in which that asset were acquired I was a resident. So question is that is this particular act is applicable in my case or not? Right answer is yes, because lawmaker says that suppose in the current year you are either non-resident, or you are resident but not ordinarily resident in the current year. Means you are resident but not ordinarily resident in the current year. But in the year in which asset were acquired in that year, or if you have earned the income that year, you were the resident. Means in the year in which asset were acquired or income you have earned, in that year you were resident, then this act is applicable. So in simple word, this act is applicable for two persons. One is a resident person in the current year, or suppose that person was resident, that person was resident in the year in which asset were acquired, or in the year in which that income has earned, but in the current year he is a non-resident or R but NOR, then this particular act is applicable. Answer is yes, this particular act is applicable. You got my point or not? Yes. Now we'll check directly from your book. So all people, just focus to the book, what is written in your book. So here, Black Money Act, that is page number 108, I think. So just check page number 108, Black Money Act. Overview of the black money and imposition of tax law. The black money, name of this act is Black Money, Undisclosed Foreign Income and Asset. Black money means undisclosed foreign income or asset, and imposition of tax act 2015, passed on 26 May 2015 and applied to whole India with assessment year 16-17. Now what charging section says that? Charging section says that every assessee. Now here, who is the assessee? So directly we'll check the assessee first. Here assessee means a person resident in India as per section 6 of Income Tax Act in the previous year. So either the person is resident in current year, or guys, a person is non-resident or resident but not ordinarily resident in the previous year. But who was a resident in India either in the previous year in which undisclosed income relates, or previous year in which undisclosed asset located outside India was acquired. Means in the year when that asset were acquired, that year he was resident, or in the year in which that he has earned the income outside India, in that year he was a resident, then also this act is applicable. So here assessee means either person resident in current year, or current year he is a NR or R but NOR, but in the year in which asset were acquired, that year he was a resident, or that income is belongs, in that year he was a resident as per income tax law, then that will be treated as the assessee. So here assessee would be liable to pay 30% tax in respect of undisclosed foreign income and asset of the previous year, means of whatever the undisclosed foreign income and asset of the previous year. Now undisclosed asset located outside India shall be charged to tax in it on its value in the previous year in which such asset comes to the notice of the AO. So undisclosed foreign asset will be charged to tax in the previous year when it comes to the notice of AO. So suppose I have acquired the asset 20 years ago, but it came to the notice of AO in the current year, so it is going to be charged in the current year. Now what do you mean by the undisclosed foreign income or asset? So it means total amount of undisclosed income of the assessee from source located outside India and the value of undisclosed asset located outside India. Now what is the undisclosed asset located outside India means? Suppose you are having any asset including financial interest in any entity. Financial interest in any entity means, suppose I am having the shares of Microsoft, or I am having the shares of Apple Inc., or suppose I am having the shares of any foreign company like Google. That is called financial interest. So guys, here undisclosed asset located outside India means any asset including the financial interest located outside India held by assessee in his name. Means suppose that asset is held in my name only, or in respect of which he is a beneficial owner, or I am that asset is not in my name but I am a beneficial owner. For an example, suppose one property I have purchased in Dubai in the name of one sheikh, but I am a beneficial owner, means money is given by me, but that property is in the name of the sheikh in the Dubai. So guys, he is a beneficiary, I am a beneficial owner. So beneficial owner means a person who give the money, so that is called beneficial owner. So either asset is held in your name only, or in respect of which you are the beneficial owner, and he has no explanation about the source of investment in such asset, or explanation given by him is of opinion of AO is unsatisfactory. Means either you are not able to give the explanation, or whatever explanation you are giving, whatever explanation you are giving, that explanation is not satisfactory. Whatever explanation you are giving, that explanation is not satisfactory, then it will be treated as undisclosed asset located outside India. So guys, any asset including financial interest in any entity held by assessee in his name or in respect of which he is a beneficial owner and he don't have any explanation about the source of investment in such asset, or the explanation given by him in the opinion of the AO is unsatisfactory, then it will be treated as undisclosed asset located outside India. Now, what do you mean by the previous year? Previous year is very simple, guys. Previous year means period of 12 months commencing from 1st April and completing on the 31st March. That is called previous year. But there may be possibility. Suppose businesses started in current year and businesses closed down in current year only. Means business started in the current year and wind up in the current year. So business started in the current year and wind up in the current year. Then guys, previous year will start from the date on which business is started and it will be completed on the date when business is winded up. So this, try to understand. Period beginning with the date of setting up a business and ending with the date of closure of the business or 31st March, whichever is earlier. Suppose your business is closed in the month of the December. So December, your previous year will be ended. But guys, suppose businesses continue, then 31st March will be the end of previous year. But previous year will start from the date on which businesses started. Now, period beginning with the date on which new source of income comes into existence. Suppose there is no business, but you are having some new source of the income come into existence, and ending with the date of closure of the business or by 31st March, whichever is earlier. Now, next part. Period beginning, there may be possibility you are doing the business from the last year. So, your previous year will start from the 1st April, but it will be end. Suppose for an example, in the current year, your business is discontinued, or your business is discontinued, or suppose dissolution, or there is a liquidation of company, then till the liquidation there will be a previous year. So here period beginning with the 1st April and ending with the date of discontinuation of the business or the dissolution of the unincorporated body or liquidation of company, as the case may be. Now guys, this definition, there is no need to remember this definition. Okay, you just remember previous year means start from 1st April and end on 31st March. That is called your previous year. Done. So what we have discussed till now, charging section says that this act is applicable for every assessee. Assessee means a person resident in current year, or suppose in current year he is a non-resident or R but NOR, but in the year for which that income is belongs, in that year he was resident, or for the year in which asset he has acquired, in that year he was the resident. So in that year he was the resident, then also this act is applicable. Now this act says that if there is an undisclosed foreign income or undisclosed foreign asset, then the value of that asset or on that income, there will be tax at the rate 30%, and we will discuss in the later part that there will be a penalty at the rate like 90%. So 3 times of the tax will be the penalty. Now there is a one question. Okay, sir, mostly in the examination you will get the question about asset only. Foreign, they have the asset, because suppose for an example, I am having one income from foreign, but income I will deposit in the foreign account only. So foreign account, in bank account I have deposited, so account will be treated as asset. So ultimately in examination as well as for the your purpose, you should remember the foreign asset. Now sir, how we will calculate the value of the foreign asset? That is one interesting part, and that you have to remember. Okay, value of undisclosed asset. Suppose for an example, I have purchased one property outside India and it was comes to notice to the AO in the current year. So guys, always remember in current year it is going to be charged. So current year is your previous year, and in previous year your valuation date will be the 1st April of previous year. So our previous year is 23-24. So our valuation date will be the 1st April 2023. Now sir, how to value the property? So try to understand. First is a value of the undisclosed asset, means how we will calculate the FMV as per the rule number 3.1. And rule number 3.1 says that first is, in case of the bullion, jewelry, precious stone, artistic work. So bullion, jewelry, precious stone or artistic work. Artistic work means archaeological collection, drawing, paintings, sculptures or any other work of art. Hey guys, can I say that they are mentioning about here, they are saying jewelry, drawing, painting, sculpture, archaeological collection, any other work of art and bullion. So they are in other sources we have discussed the jewelry, drawing, painting, sculpture, archaeological collection, any other work of art and bullion. So here jewelry, here drawing, painting, sculptures, archaeological collection, any other work of art and bullion, guys. In this case, just take the whatever your cost of acquisition of that asset, means whatever cost of acquisition of that asset, or NRV on the valuation date, whichever is higher. Means cost of acquisition of that asset or NRV as on valuation date, whichever is higher, that will be treated as your FMV, and on that FMV you have to pay the tax at the rate 30%. So for an example, suppose I have purchased one for jewelry in the foreign. I have purchased for 20 lakh. Today's on the NRV on the valuation date means 1st April is 80 lakh. So here 80 lakh and 20 lakh higher comes to 80 lakh. So 80 lakh will be treated as the value of that jewelry. So in case of the jewelry, drawing, painting, sculpture, archaeological collection, any other work of art and bullion, just take the cost of acquisition, means how much you have invested and what is the value on the valuation date, whichever is higher, that will be value, and on that value you have to pay the tax at the rate 30%. So here, for this purpose, assessee may obtain the valuation report from the valuer recognized by the foreign government. Now from foreign registered valuer, you can get the report of the NRV. Now next part is related to quoted share and security. Quoted share and security means any share and security which is quoted in any stock exchange outside India. Now stock exchange outside India means established security market outside India. For an example, I am having the shares of the Microsoft, or I am having the shares of the Apple, or I am having the shares of the Google. So that Google share, Microsoft share, or like that like Apple share, they are traded in the Nasdaq in the USA. So in the USA stock exchange, in USA there are stock exchange, so they are traded in the Nasdaq. So that is known as the quoted share and security. So what value you will take for the quoted share and security? So here guys, they are saying that first take the cost of acquisition of that share, and guys, compare this cost of acquisition with average of the lowest and highest price on the valuation date in the established security market. What you have to do? First take the cost of acquisition, means whatever cost of acquisition, and second is a average of the lowest and highest price, average of the lowest and highest price on the valuation date. Valuation date means 1st April of previous year in the established security market. And guys, suppose on that day there was no trading, then just you have to take the average of the previous trading session. So here next is, if no trading of such share or security on the valuation date, then just take the average of lowest and highest price of immediately preceding the valuation date when such share or security traded in the established security market. So for an example, I can take example. Suppose guys, I have purchased the shares of the Apple on 16 July 2007, and that time I purchased the share for the 10 lakh. Now earlier it was not known, means it was undisclosed, but suppose in the current year AO get to know that about the share. So first we have to take the valuation date. So here we have to consider the cost is 10 lakh. Now second is a NRV as on valuation date. Now NRV as on valuation date will be always 1st April of the previous year. In case of the asset, 1st April of previous year will be the valuation date. So here guys, our valuation date is 1st April 2023. So on 1st April 2023, suppose this share highest price was, for an example, highest price and lowest price, just take the average, and after considering the average, multiply by number of share. So suppose today value is the 90 lakh rupees. So guys, I have to consider here 90 lakh for the purpose of value of undisclosed foreign asset. So what I am saying that we have discussed about the two asset till now. One is in case of the jewelry, drawing, painting, sculpture, archaeological collection, any other work of art and bullion. Just take the whatever your cost of acquisition of that asset, or NRV as on valuation date, whichever is higher. Valuation date is a 1st April of previous year. Second is in case of quoted share and security, just take the whatever your cost of acquisition or average of the lowest and highest price on the valuation date in the established security market. Average of lowest and highest price on the valuation date in the established security market, but on valuation date 1st April or previous year, suppose there is no trading, then just take the last trading session average. You got my point or not? Yes. Now next part. Point number 3rd is an unquoted equity share. Just skip this point for the some time. First we will discuss about the unquoted share and security other than equity share. Suppose I am having some unquoted foreign security other than equity share, means foreign government bonds I am having, or some deposit certificate of the foreign company I am having, or preference share of the foreign company I am having. That is called unquoted share and security. So here guys, just take the cost of acquisition or NRV as on the valuation date. NRV as on the valuation date. And for this purpose, assessee may obtain the valuation report from the valuer recognized by the foreign government. Now, in case of immovable property, suppose I am having the property in Dubai, then what value we will consider? Whatever the cost of acquisition or NRV as on valuation date, whichever is higher. So cost of acquisition or NRV as on valuation date, whichever is higher. And for this purpose, assessee may obtain the valuation report from the recognized valuer recognized by the foreign government. So here guys, here NRV, here they consider only NRV as well. Why sir SDV is not considered? Guys, SDV, that stamp duty value, is for the Indian property na. That stamp duty act and all, that is applicable in India na, that is not applicable outside India na, that is not applicable outside India. So just you have to take the cost or NRV. So guys, we have discussed till now 4 assets. One is in case of the jewelry, drawing, painting, sculpture, archaeological collection, any other work of art and bullion. Second is quoted share and security. Third is your unquoted share and security other than equity share. Fourth is immovable property. In simple word, can I say that in all the assets they are saying that just take the cost of acquisition or NRV on the valuation date. In all the assets they are saying same na, cost of acquisition or NRV on valuation date, cost of acquisition or NRV on valuation date. Here also cost of acquisition or NRV on valuation date. Here also cost of acquisition or NRV. And how you will take the quoted share and security NRV? Just take the average on valuation date. Average of the highest cost quote and lowest quote. So highest and lowest quote average, that will be your NRV only na. So guys, till now can I say that from here this first jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, bullion, as well as quoted share and security, as well as guys unquoted share and security, as well as immovable property, everywhere they are saying just take the original cost or NRV on the valuation date, and valuation date will be the 1st April of previous year. Whichever is higher, that will be treated as your value, and on that value you have to pay the 30% tax. That is the point. Now guys, suppose you are having the unquoted equity share, then what will happen? So unquoted equity share, this point also we have discussed somewhere. I think in the accreted income we have discussed the similar concept. So here we will discuss that part. All people pay attention. Suppose for an example, in USA there is a one company, that company name is a Kin Private Limited. This is the USA company. And guys, in USA company, suppose I am having the 10,000 shares. I am having the 10,000 shares of that USA company. And this is the private limited company. So here all people pay attention. What happened? In USA, there is a Kin Private Limited is one company. Kin Private Limited is one company. And of that company, I am having the 10,000 share. And private limited company. So unquoted equity share. And total share of this company is suppose 50,000 share. So I am a 1/5 shareholder. Now how to value this 10,000 share? How to value this 10,000 shares? So first I will take the cost of acquisition. There is no issue with the cost of acquisition. And second is guys, here how we will calculate the NRV. So on the valuation date, we will take the A plus B minus L divided by P multiply by PV. Means in simple word, intrinsic value of the Kin Private Limited we will consider. Intrinsic value means A means just take the asset book value, but other than share, security, jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, and bullion and immovable property. For this asset, just take the fair market value that will be given in B, and L means liability will be reduced at book value divided by total paid up share capital of that company multiply by how much paid up share capital hold by you. That will be the value of private limited company equity share. So private limited company equity share, how value will be derived or determined? Here guys, private company share value will be determined on the basis of A plus B minus L divided by P multiply by PV. A means asset, but other than share, security, jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, and bullion. Means for this asset, just take the fair market value. And guys, other asset, just take on the book value. And liability on the book value divided by total paid up share capital of that company multiply by how much paid up share capital is held by you. That will be the value of unquoted equity share. So here, notes. A means just take the book value of all asset, other than covered in part B. So other than covered in this part B, just take the book value of all asset, but exclude TDS, TCS, advance tax. TDS, TCS, advance tax is not your asset. But guys, if there is an income tax refund, then it will be your asset. Deferred revenue expenditure is not your asset. So guys, book value of all the asset. Now, FMV you have to consider for the bullion, jewelry, precious stone, artistic work, shared security and immovable property as determined in the manner provided in this rule. So guys, you will take the Kin Private Limited balance sheet, and in balance sheet, suppose in asset side, if there is a shared security, jewelry, drawing, painting, sculpture, archaeological collection, any other work of art or bullion or immovable property, for those asset you will take the fair market value. Other asset you will take the book value, and guys, liability you will reduce at book value. Here, book value of liability you will reduce, but not including the following. Means here, paid up equity share capital is not your liability. Amount set apart for the repayment of the dividend on the preference share or equity share, that is not your liability. Reserve and surplus is not your liability, but suppose if there is a depreciation reserve, there will be a liability. Provision for tax is not a liability. Provision made for uncertain liability is not a liability, and contingent liability is also not a liability. But guys, if there is a arrears of dividend payable in respect of cumulative preference share, that will be treated as your liability. So here, paid up share capital, equity share is not a liability. Dividend is not a liability. Reserve and surplus not a liability. Provision for tax is not a liability. Provision made for uncertain liability is not a liability, and contingent liability is not a liability. Divide by total amount of paid up equity share capital as shown in the balance sheet, and divide by the paid up value of each such equity shares. So in simple word, what I am saying that here guys, for the how to determine the value of unlisted equity share in any foreign company. So I am having the unlisted equity share of the Kin Private Limited 10,000 share. So how to calculate the value of this 10,000 share? It's very simple. Just take the A plus B minus L divided by P multiply by PV. A means book value of asset, but B means guys for that 10 assets, shared security, jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, bullion and immovable property. Just calculate the fair market value, fair market value, fair market value. Means NRV, and guys, liability will be at the book value divided by total paid up share capital multiply by how much paid up share capital is held by you. So guys, in case of this all asset, can I say that how you will determine the value? Value means how you will determine the FMV. Just take the original cost or NRV as on the valuation date, and NRV as on valuation date. Valuation date will be the 1st April of the previous year. Done. Now guys, next asset is very interesting, bank account. Suppose there is an undisclosed bank account, means they got the detail that you are having the bank account in the Swiss bank. Then how will we determine the value of bank account? So they are saying that for bank account, we will take whatever amount deposited, deposit, just aggregate it. Whatever amount deposit, just you have to aggregate. Withdrawal will not be reduced. So in simple word, suppose I am having one bank account in the Swiss bank or any foreign bank in the foreign, and suppose first I have deposited the $10,000. After that I have deposited the $9,000. Suppose I have withdraw also. I have withdraw the money. Suppose $5,000 I have withdraw. After that I have deposited some $15,000 also. Now I have withdraw the $10,000 and I spent somewhere in foreign. Again I have deposited the $10,000 in that account. Then what will be the value? So guys, here value means just take the deposit amount. So here 10,000 plus 9,000 plus 15,000 plus 10,000. So 25,000 plus 10,000, 35,000 plus 9,000 comes to 44,000. So $44,000 will be the value of bank account. Withdrawal will not be reduced. Withdrawal will not be reduced. But guys, suppose if I withdraw from any one bank account and deposit in the another bank account. Suppose if I withdraw from one bank account and deposit in the another bank account, then sir, that deposit will be considered or not? Obviously that deposit will not be considered, because for an example, suppose this is one bank account in this with the Swiss bank. I am having one more bank account in the Canada. So suppose from Switzerland I have withdraw some amount and deposit in the Canadian bank, then for that deposit will not be considered, because that is withdraw from here na. So in this deposit it is already included na. In this deposit it is already included na. In this deposit it is already included na. So in this deposit, when it is already included, then obviously withdraw and you deposit in the another bank account, that will not be considered. So here, what do you mean by the bank account? Means how you will value the bank account. So here, the sum of all the deposit made since the date of opening the account, means from the date on which you have opened the account, from that day, whatever the amount deposited in that bank account, that will be considered. Now guys, when this act is came now in the 2015, then government has given you one option to declare all your foreign asset. They have given one option to declare your all foreign asset and just pay the taxes on whatever value on 1st July 2015. So when this act is came now, then government has asked you, okay, you can declare your foreign asset and just pay the tax on whatever value as on 1st July 2015. Suppose assessee declared this bank account. Suppose assessee declared this bank account that time, and he has paid the taxes on the whatever value on 1st July 2015. Then guys, here deposit we will consider only deposit made after that day. Means whatever deposit made before that, that is already considered here on the 1st July 2015 now. So after 1st July 2015, whatever deposit you have made in that bank account, that will be considered here. So what this point says, pay attention. Bank account. The sum of all the deposit made since the date of opening the account, and where such account is already declared earlier and tax penalty paid, the sum of all deposit made since the date of such declaration. Means after declaration, whatever amount deposited, only that will be considered. Now one note is given. Okay, suppose any deposit is made from the withdrawal of the account, then such deposit shall not be considered. Means suppose any deposit is made out of the withdrawal from an account, then that deposit will not be considered. Means this is the example of I withdraw from the Swiss bank and I have deposited in the Canadian bank. Then that deposit will not be considered because I withdraw from some bank account. Means in that bank account deposit it is already included. Now, sir, suppose I am having interest in any firm or LLP or AOP BOI, then how to determine the interest value? Means for an example, there is a partnership firm in the UK and I am holding 20% PSR. If I am holding 20% PSR, then how to determine the value of that like share? So here lawmaker says that just do one thing. Whatever the partnership firm, LLP or AOP BOI outside India, first calculate the net worth of the asset. Net worth means A plus B minus L. Means for that partnership firm or LLP or AOP BOI, first calculate the A plus B minus L. Means all asset book value, but other than that 10 asset, fair market value and liability is on the book value. So A plus B minus L, and guys, whatever the value that will be net worth of that firm or LLP or AOP BOI, first bifurcate this net worth in the capital ratio. Means whatever your capital account, so just give till the capital account. Means whatever your capital account, that much amount is allocated towards the capital, and remaining amount will be allocated either in the dissolution ratio, and if there is no dissolution ratio, then you have to bifurcate in the PSR, that is profit sharing ratio. So here one example is given, all people pay attention. Value of asset, how to determine the value of asset? So net worth of asset. So net worth of asset, how to determine? First distribute amongst the partner or member in the proportion in which they contributed capital, and balance net worth in the dissolution ratio or PSR in absence of the dissolution ratio. So suppose net worth of the firm is a 26 lakh and capital of the partner is a 10 lakh, 5 lakh, 2 lakh. So can I say that here 10 lakh plus 5 lakh plus 2 lakh, it's total 17 lakh. So out of 26 lakh, first 17 lakh will be bifurcated 10 lakh, 5 lakh and 2 lakh, and remaining is their dissolution ratio and PSR is equal. Then guys, 17 lakh will be distributed in the ratio of 10 lakh, 5 lakh and 2 lakh, and remaining 9 lakh means 26 lakh minus your 17 lakh, remaining is 9 lakh. 9 lakh will be distributed in the equal ratio, that is called PSR. So divide by 3. So 3 lakh, 3 lakh, 3 lakh. So here the Mr. A total asset value comes to the 13 lakh. Mr. B total asset value comes to the 8 lakh, and Mr. C total asset value comes to the 5 lakh. And guys, value of any other asset, in case of any other asset, just take the cost of acquisition or NRV as on valuation date, whichever is higher. So this is called your valuation of your asset, means how to value the asset. So all people pay attention. Again, I am repeating whatever we have discussed till now. So what we have discussed till now, pay attention. What we have discussed till now, just pay attention. We have discussed that Black Money Act. Guys, this Black Money Act 2015, that is black money, undisclosed foreign income and asset. Imposition of Tax Act 2015. This act says that if there is an undisclosed foreign income or undisclosed foreign asset, that will be chargeable to tax at the rate 30%. Now, income will be chargeable in the respective year only, but asset will be charged to tax in the year in which it comes to the notice of the AO. So here, assessee means, guys, a person resident in India in the current previous year, or suppose in current year he is a non-resident, or he is a resident but not ordinarily resident, but in the year in which that asset acquired or the income belongs, in that year he was the resident, then also this act is applicable. Now, how to value the asset? So valuation will be done on the 1st April of the previous year. That is called valuation date. So how to value? So in case of the, guys, here jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, whatever the cost of acquisition or NRV as on valuation date or on the 1st April or previous year, whichever is higher. Quoted share and security, cost of acquisition or average of that shares in the recognized stock market, established market, average of that price, that is called NRV, whichever is higher. In case of unquoted equity share, just find out the net worth of that company and divide by total paid up share capital, multiply by whatever paid up share capital like held by you. Now next is a unquoted share and security other than equity share, cost of acquisition or NRV on valuation date, whichever is higher. Immovable property, cost of acquisition or NRV on valuation date, whichever is higher. Bank account, just take the deposit. Just take the deposit. Okay, so that is bank account. In case of the firm, LLP, AOP, BOI, your share, that is A plus B minus L. But guys, here whatever the net worth, first apportionate till the capital account is there, and guys, remaining will be distributed in the dissolution ratio or PSR. And in case of any other asset, just take the cost of acquisition or NRV on the valuation date, whichever is higher. Directly check your compiler. So guys, in your compiler, topic number 7. Check your compiler. Topic number 7. Topic number 7. Question number 1. Topic number 7. Question number 1. Shiva is one question. Sir, I have purchased foreign asset in 2014 and till previous year 22-20 I have not disclosed, but in 23-24 I have disclosed. What is the taxability? It will not be covered in the Black Money Act. It may be covered in your Income Tax Act. Because in Black Money Act, it will not be covered. Okay, now question number 1. All people just focus here. Question number 1. After that, I will give you break for some time. Question number 1. What question number 1 says? Ravindra, a Indian citizen, left India and settled in UK on 10 April 2016. So guys, on the 10th April 2016, he settled in the UK. Earlier, he was in the India, but he settled in UK in 2016. So can I say that from 2016, he is a non-resident only? He had never left India previously since April 2008. So after April 2008, he never left India. So I can say that from April 2008 till 10th April 2016, he was in India. So he was resident also. He acquired a property worth 200 lakh in his name in the financial year 13-14 in Malaysia. So in Malaysia, he has purchased one property in his name in the previous year 13-14. That time he was a resident, na? Because from April 2008 till 10th April 2016, he was in India. So now he is a non-resident, but in the year in which he acquired this property in the Malaysia, in that year he was a resident. Now what happened? Assessing officer came to know about this in the March 2024. So in the current year, AO came to know about that property. Based on the investigation made by the enforcement director in the some other person case. So when ED was doing some R&D in relation to some other assessee, and here they came to know about the, like here, Ravindra is having the asset. Now the assessing officer, having recorded some concrete evidence against the Ravindra, and issue a notice under Black Money Act under section 10. So under section 10 they issue the notice to assess your asset. And Imposition Act 2015 on 27 March 2024. So in the current year he issued the notice. Mr. Ravindra counsel contend that since Mr. Ravindra is not a resident in the financial year 23-24, a notice under section 10 could not be issued to him. Is the issue of notice to Ravindra under Black Money Act is tenable in the law or not? So guys, his chartered accountant or his advocate says that, his counselor says that, since he is a non-resident in current year, so notice cannot be issued. So is his view is right or wrong? Right answer is his view is wrong. Because under this act, assessee can be either person resident in current year, or suppose in current year he is a non-resident or R but NOR, but in the year in which that asset were acquired, in that year he was a resident, then he can be treated as the assessee. So guys, it is tenable in the law. It is tenable in the law because in the year in which that asset were acquired, that year he was a resident now. Because asset were acquired in the 13-14 in the Malaysia, that time he was a resident. So notice is tenable as per the law. This is the question number 1. You have to read the answer in the break. Okay. So in break you have to read the answer. Don't read now. Now just check the question number 4. Question number 4. Just check the question number 4. What question number 4 says? Pay attention. So there is a question number 4. Mr. Pilu, age 72 years, was a managing director of the Ashok Private Limited, Surat. Earlier he was a MD of Ashok Private Limited, Surat. Mr. Pilu, age 72 years. He retired in the June 2009. He retired in the June 2009 and left India permanently in the January 2012. So January 2012 he left India. So now he is a non-resident in India because he left the India permanently in the January 2012. So now he is a non-resident. It came to the notice of the Joint Director of Income Tax Investigation in the June 2023 current year that Mr. Pilu had accumulated asset during the previous year 8-9 exceeding 500 lakh outside India, consisting of the residential apartment as well as deposit in the bank, which were not disclosed for income tax purpose up to the assessment year 12-13, for which the return of income was filed in India. So guys, he settled outside India from January 2012. So earlier he was in India. So earlier he was resident. Now in the previous year 8-9, he has acquired some asset. 8-9, he has acquired some asset of the more than 5 crore outside India, including residential apartment as well as the deposit. And he was not disclosed in the India in the return. So in return, he has not disclosed that asset. Now what happened? Mr. Pilu was served with a notice under Black Money Act in the August 2023. So department issued the notice that you was resident in that year, you acquired some asset outside India. So we are going to assess that we are going to assess that asset in the current year. Now Pilu is of opinion that since 10 years have already lapsed from the last assessment year in which it was assessed in India, no proceeding could be initiated against him under the Income Tax Act 1961 and the Black Money Act 2015. Mr. Pilu is a non-resident for assessment year 24-25. Discuss the liability of Pilu under Black Money law and state the procedure and methodology for determining the value of undisclosed asset outside India after evaluating the validity of the contention raised by him. Guys, you know that 10-year limit is in the income tax. In the income tax, we have discussed that income escaping assessment. You know that 10 year before case will not be open. But guys, in Black Money Act, there is no limit of 10 year. Even you have acquired the asset in 1972 and it was not disclosed. And in current year, suppose they came to know about that asset, then they will charge the tax. So 10-year limit is not applicable in the Black Money Act. It is applicable in the Income Tax Act, but under Black Money Act, it is not applicable. So guys, here in case of Pilu, notice is valid, and under Black Money Act, they may assess all the asset, and Pilu is required to pay the tax at the rate 30%. So just read the solution of question number 4 also. And guys, I can bet you in examination you will get the same question or similar question for the 4 marks. So just read the solution of question number 1 and read the solution of question number 4. Yes, people, done with both the question? Yes, people, done with both the question? If you have done that, just say done. Hey, just tell me na done. Just say done. Done, sir, done. This week we will complete our syllabus, okay? So this is the last week. Chaliye. So now, again we are going to discuss. Sir, we have done. Just clap for us, na? Okay, we'll do clapping for you. Yes, sir. Done. Now, guys, we have discussed the how to determine the value of the asset. And guys, here we have discussed ultimately value of asset will be the actual cost of that asset or NRV as on valuation date. And NRV means the 1st April of the previous year. Now, suppose, sir, you have sold that asset before the valuation date. Then what will happen? Try to understand. Now just focus for the next 10 minutes. This topic will get over within that 10-15 minutes. Just try to understand. For an example, guys, suppose I have purchased this house. And this house I have purchased on 16 September 1992. Suppose on 16 September 1992, I have purchased this house in Nepal. So Nepal is also foreign. And I have purchased for 2 lakh rupees. So 2 lakh was the cost. What happened to my pencil here? So I purchased this house for the 2 lakh in 1992. Now guys, suppose I sold this house on 15 July 2022. In the last year, I sold this house. And suppose I sold this house for the 15 lakh. Now, in the current year, on the 10 December 2023, just AO get to know about that property. Then, sir, how to determine the value? Because cost of that asset was 2 lakh. I have sold that asset. On the valuation date, I don't have the asset because valuation date will be the 1st April 2023. So on the 1st April 2023, I'm not having any asset outside India. I'm not having any asset. So on the 1st April 2023, when I don't have the asset, then sir, how to determine the value? Because for the all asset, what was the value? Cost of acquisition or NRV as on valuation date. But before the valuation date, I have sold this asset. Then what will be the value? So here lawmaker says that before the valuation date, if you sold this asset, then your value will be whatever the cost of acquisition or your selling price, whichever is higher. Means on this also there will be a taxability, and guys, value will be your cost of acquisition or cost of asset or selling price, whichever is higher. So here cost of acquisition was 2 lakh. And here selling price is a 15 lakh rupees. Then guys, here total will be the, here cost was the 2 lakh and 15 lakh, whichever is higher is a 15 lakh. So 15 lakh will be treated as the value of this asset. Here 15 lakh will be treated as the value of this asset. Now one more doubt. Suppose, sir, we have not sold. We have gifted to someone. Then we have gifted on this date. Suppose I have gifted this property to someone. So it is a 0 price. Then what will happen? How to determine the value? Or suppose I have sold for inadequate consideration, then lawmaker says that whatever your cost or FMV as on date of transfer, whichever is higher. FMV as on date of transfer, whichever is higher. So whatever your cost of acquisition or FMV as on date of transfer. So this is the rule number 3.2. So what rule number 3.2 says that? Try to understand. This is very interesting. Asset transfer before the valuation date, then whatever the cost of acquisition or sales value, whichever is higher. But guys, if asset transfer without consideration or inadequate consideration, then the cost of acquisition or FMV on the date of transfer, whichever is higher. Now guys, there is one interesting point that we will discuss, but I will take one example, and with the help of example, I will teach you this concept. But on this concept, there will be a question in the examination. So just pay attention. Here rule number 33 says that where suppose new asset is acquired out of consideration received on account of transfer of old asset or withdrawal from the bank account, then FMV of such old asset or bank account shall not be considered. They are saying that suppose one old asset is transferred and from that money you acquired the new asset, so new asset value will be considered. So that old asset will not be considered. Old asset will not be considered. Or suppose for an example, from the bank account you have withdraw something and you acquired the asset and this asset is considered, then in bank account it will not be considered. I will take the example and from the help of that example we will understand. All people pay attention. All people pay attention. For an example, try to understand. In the UK, I was purchased one property. So suppose this property I have purchased in UK and cost of this property was 3 lakh. Cost of this property was 3 lakh. And I have purchased on the 13th July 1999. Now suppose I sold this property on 15th April 2003. I sold this asset. And I sold for the 20 lakh. I sold for 20 lakh. But guys, this 20 lakh I have deposited in the bank account. Try to understand. Deposited in the bank account. Deposited in one foreign bank account. Then try to understand this asset value will be, can I say that cost or selling price, whichever is higher? Because if you transfer before valuation date, then cost or selling price, whichever is higher. So can I say that this asset value will be the 20 lakh rupees? This asset value is a 20 lakh rupees. This asset value is a 20 lakh. And guys, this 20 lakh I have deposited in the bank account. This 20 lakh rupees I have deposited in the bank account. This 20 lakh I have deposited in the bank account. So can I say that when I will take the bank account value, so this 20 lakh will already be covered in the bank account, na? When I will consider the bank account as an asset and in bank account I will take the deposit. So this 20 lakh will already be covered in the bank account now. So here guys, this 20 lakh will not be considered while calculating the asset value. So it's very simple. You understood this part or not? Just tell me. Meghna, Shedlana, Shiva, Nehal. Okay, if I sold this asset for 20 lakh, then this asset value is a 20 lakh. But guys, this 20 lakh I have deposited in the bank account. So when we will consider the bank account, when we will value the bank account, so in bank account we will take the deposit. So this 20 lakh will already be covered in the bank account, na? So in bank account value it is already covered. Then in this asset will not be considered while calculating the tax. You understood this point or not? Just tell me. You understood this point or not? You have understood this point or not? Tell me. You understood this point? Yeah. So everyone understood this point. Okay, sir, suppose we sold this asset and we deposited in the bank account. So it will already be covered in the bank account. Na? It will be covered in the bank account. So obviously this 20 lakh will not be considered while calculating the asset value. Done? Now one more example. Guys, for an example, try to understand. Suppose I am having one bank account in Canada or Switzerland, foreign bank account. And suppose in bank account, there was a deposit. So deposit was $10,000, again $10,000, again $20,000, and again $15,000. So can I say that here deposit was 10, 10, 20, it was 40 and 15, it was $55. So $55 was deposit in the bank account. Okay? Now what happened? From this bank account, suppose I have withdraw some amount. I have withdraw from this bank account. I withdraw $15,000 and I have purchased one property. And guys, this property cost was $15,000. I withdraw from the bank account and from that money I purchased that property. Now this property value on the valuation date means 1st April of current previous year. Suppose value is a $60,000. So $60,000 is FMV. So can I say that guys here, I will consider this asset on the valuation date? Answer is yes. 60,000 is value, I will consider. So lawmaker says that okay, when you withdraw from the bank account, then guys, here can I say that this 15,000 I have withdraw from this bank only, na? I have withdrawn the $15,000 from this bank and I have acquired the property, and this property value is a $60,000. So today I will consider the $60,000. So guys, out of value of $55,000, can I say that $15,000 will not be part of $55,000, and here in the bank account value will be only $40,000. So it's very simple. Okay, suppose if you sold any asset and acquired another asset, and another asset is considering in the asset, then that earlier asset will not be considered. Or if anything is withdrawn from the bank account, and guys, if that asset is there and it is included in the asset, then guys, in the bank account valuation, that 15,000 will not be considered. Otherwise there will be a double taxation now. Because from same account I am withdrawing and I am purchasing one asset. So this asset will be considered na $15,000. I purchase one asset. So guys, 60,000 and $15,000 higher comes to the 60,000. So when 60,000 is considered here, when $60,000 is considered here, means this asset is considered here, then guys, in the bank account deposit, that $15,000 will be reduced. That $15,000 will be reduced. You got my point or not? You understood my point or not? Yes, sir, we have understood your point. We got your point. Done. Okay. So again, read this line, what this line says. Try to understand. This line says that where a new asset is acquired out of the consideration received on account of transfer of old asset or withdraw from the bank account, then FMV of such old asset or bank account shall not be considered. You got my point or not? Yeah. Now guys, just read this example, and one solution is given. Just read it, and if you have any doubt, then you can ask me. Just read it. Just read it with the solution. Done, people? Done with this example? Everyone done? Hey guys, you have done this example or not? Just tell me, you have completed this example or not? Done with this example? Everyone? Sherilina, Shiva, Nehal. Okay, done. Now guys, sir, suppose for an example, this asset value is in foreign currency, then how to convert it into the Indian currency? So guys, on the valuation date, if asset value is in foreign currency, then how to convert it into the Indian currency? So how we will convert it into the Indian currency? Just we have to take the RBI reference rate. We will take the reference rate on the valuation date, means RBI reference rate. Suppose if it is in dollar, then RBI reference rate from dollar to rupees. Suppose if it is in the UK pound, then UK pound to the rupees. So RBI reference rate we will take. But suppose for an example, that value is in any foreign currency and for which RBI reference rate directly is not given. If RBI reference rate directly is not given, then guys, what we will have to do? First, convert that currency into the dollar and from US dollar to the Indian rupees. So for an example, suppose in the Bermuda, there is an asset located in Bermuda and value is given as per the Bermuda currency. So here value is given as per the Bermuda currency. So from first Bermuda currency to the a dollar, US dollar, and from US dollar to the Indian rupees, that is RBI reference rate is given for the dollar. So here what does this mean? So here rule number 3, sub rule 4 and rule number 3, sub rule 5. What this rule says? Rate of conversion of currency used to determine the FMV of the asset. RBI reference rate on the valuation date. But if RBI reference rate is not given, then FMV of such asset shall be converted into the US dollar from the foreign currency and thereafter US dollar to the Indian currency by the RBI reference rate. Now what is the valuation date? Valuation date for valuation of asset and conversion into the Indian currency. So here valuation date for valuation of asset and conversion into the Indian currency. If asset is declared under section 59, guys, here when this act is came now, that time they have mentioned about you can declare the asset here. So guys, if asset declared under section 59, then 1st July 2015 was a valuation date. But if asset is not declared in any other case, then 1st April of previous year is your valuation date. So your valuation date is a 1st April of previous year. Now, there is some definition is given. We will discuss this definition in the later part. First is the scope of total undisclosed foreign income and undisclosed foreign asset. So guys, which foreign income or undisclosed foreign asset will be covered here under this act? So there is a section 4. Section 4 says that, okay, what do you mean by undisclosed? So undisclosed means very simple. Suppose you file the return of income under section 139.1, 139.4, 139.5. You have not disclosed that asset. Or you was supposed to file the return, but suppose you have not filed the return, because in the income tax, you know that if you remember the section 139.1, in the 139.1 we have discussed that, okay, if you are having any financial interest in foreign entity or you are holding any asset outside India and you are resident or ordinarily resident, then you have to declare, you have to file the return, but you have not filed the return. Then guys, that will be treated as your undisclosed asset or income. So what do you mean by the undisclosed asset or income here? So scope of the total undisclosed foreign income or foreign asset. Total undisclosed foreign income or asset of any previous year would be income from the source located outside India, which has not been disclosed in the ROI, means you have not disclosed in the ROI. File under Income Tax Act 1961 on or before the due date under section 139.1 or belated return under section 139.4 or in the revised return under section 139.5. So you have not disclosed that income. That is called your undisclosed foreign income. Or income from source located outside India in respect of which a return is required to be filed under section 139 of the Income Tax Act 1961, but no return or belated return or revised return has been filed under these sections. Or guys, value of any undisclosed asset located outside India. So value of any undisclosed asset located outside India. Guys, you know that nowadays in the return of income, you have to declare the asset also. You have to give the detail of asset. Suppose asset detail is not given, then it will be covered in the undisclosed asset. Now, some notes are given, and these notes are very simple and logical. Two notes are given, and this two notes says that suppose guys, if any of your income is already covered in the Income Tax Act, then obviously it will not be covered in the Black Money Act, or vice versa. Suppose if any undisclosed income or asset is already covered in the Black Money Act, then it will not be covered in the Income Tax Act. So very simple point. So here, income from source outside India is already included in any assessment or reassessment in income tax. Means suppose if any income from source outside India is already included in your assessment or reassessment under Income Tax Act, under section 29 PGBP, 43C is also related to PGBP, 57 is your other sources and all, 92C is a transfer pricing, then such income shall not be included in total undisclosed foreign income. It's very logical. Okay, like if it is already included, in Income Tax Act, then under Black Money Act it will not be included. Or any income or asset is included in the undisclosed foreign income or asset under the act, under this act, then such income or asset shall not be included in the Income Tax Act. Done. Now guys, there is a one very interesting part here. Okay, how to compute the undisclosed foreign income and asset? Guys, always remember, while calculating the undisclosed foreign income now, any expenditure is not allowed. Any expenditure is not allowed means your gross income is going to be taxable. So here, expenditure or set-off of losses not allowed against undisclosed foreign income. So against undisclosed foreign income, any expenditure is not allowed, or any set-off of losses is also not allowed. Means gross income is going to be taxable. Any expenditure and all not allowed. In the income tax, normally expenditure is allowed. Na? If there is any income and there is any expenditure against that income, then that expenditure is allowed. But here guys, under Black Money Act, any expenditure is not allowed. Any set-off of the losses is not allowed. Now, while considering the asset, here this is the interesting part and last part, I think. So just focus here. If any asset is acquired out of the any income which was already assessed earlier under Income Tax Act before Black Money Act or a Black Money Act, then such income shall be reduced. So it's very simple. Suppose guys, for an example, you acquired some asset outside India and some amount you utilize from the white money and some amount you utilize from the black money. Some amount you utilize from white money, some amount you utilize from black money, then can I say that whatever money you have utilized from white money means amount income which was already declared in the income tax or Black Money Act. So guys, that portion will be reduced while considering the value of the asset. So here, what one example is given, pay attention. Mr. Hari acquired share of the foreign company for rupees 10 lakh. He utilized 4 lakh white money and the 6 lakh black money. So 4 lakh white money he utilized and 6 lakh black money he utilized. Now value of such asset as per rule number 3.1 is suppose 42 lakh. Now today value is a 42 lakh. So can I say that in this 42 lakh you have utilized the 4 lakh white money na? So today value should be the 38 lakh. Means the asset, undisclosed asset will be 38 lakh. So what I am saying that one asset is acquired. Here total asset cost was 10 lakh and you utilized 4 lakh white money and 6 lakh black money. So guys, 4 lakh was the white money. So today value is a 42 lakh. So out of 42 lakh, 4 lakh was a white money na. So 4 lakh will be reduced. Here 4 lakh will be reduced. But guys, you are thinking that sir, why you are doing this? Like sir, 4 lakh white money we utilize, 6 lakh black money we utilize, total we utilize the 10 lakh. So can I say that 40% white money we utilize, 60% black money we utilize? So guys, out of the 42 lakh value, only 40% will be reduced now. Means logically 40% should be reduced now. Because 42 lakh multiplied by 40%, 42 lakh multiplied by 40% comes to the 16 lakh 80,000. So 16 lakh 80,000 should be reduced. Now why only 4 lakh you are reducing? Guys, here we have to reduce only 4 lakh. Means whatever the original amount you have utilized. So whatever the value of today asset and how much white money you have utilized. So you have utilized only 4 lakh white money. So 4 lakh will be reduced. And 38 lakh will be the value of that asset. 38 lakh will be the value of that asset. So that asset value will be 38 lakh rupees. You got my point or not? Yes. But guys, whatever you were thinking that about that proportionate na Nagappan, that is applicable in case of immovable property. In case of immovable property, there will be a proportion. In case of immovable property, there will be a proportion. So here, what happened in immovable property? In continuation of point number B, in case of immovable property, following amount shall be reduced. So in immovable property, we will do the proportion on the today's value. So here, FMV of asset multiply by white money divided by total cost of the asset. So one example I have taken here. A house property located in country outside India was acquired by Mr. A and assessee in the previous year 1213 for the 60 lakh. So you have acquired one property for the 60 lakh in the previous year 1213. Out of the investment of the 60 lakh, 35 lakh was assessed to tax in the total income in the previous year 1213. So 35 lakh was your white money. And in the, like 1213 and earlier year, such undisclosed assets comes to the notice of AO in the current year. And guys, current year value is the 120 lakh. So here we have to do the proportionate when there is a immovable property. So whenever there is a immovable property, so today value is a 120 lakh. Today value is a 120 lakh. And guys, in this 120 lakh, can I say that how much you have invested? 60 lakh, And what was the white money? White money was 35 lakh. So multiply by 35 lakh. So here, if you do the proportion, so 120 divide by 60 multiply by 35, so it comes to the 70. So 70 lakh is your white money value. So remaining 50 lakh is your black money value. So this will be considered in your value of the asset. So what I'm saying that if any asset is acquired out of the black money as well as the white money, so while considering that today's value, whatever white money you have utilized, that will be reduced. Whatever white money you have utilized, that will be reduced. But guys, here, in case of the immovable property, you have to take the proportion. In case of immovable property, this is very logical. You have to take the proportion. So here, immovable property value, today value is a 120 lakh. You utilize the 60 lakh. Out of 35 lakh was white money. So in simple, but can I say that 25 lakh was black money? So here 120 divided by 60 multiply by 25. So directly you will get the 50 lakh amount. So this 50 lakh will be your value of the asset. You got my point or not? Yes. Now guys, some penalty is given. Now, what are this penalty? First is section 41. There is a section 41. This 41 says that where tax has been computed in relation to the undisclosed foreign income and asset, then guys, in addition to the tax, a sum equal to the 3 times of the tax so computed, you have to pay the penalty. So here 3 times you have to pay the penalty. So whatever your tax, on that tax multiply by 3 times, you have to pay the penalty. Now section 42 penalty says that failure to furnish return in relation to foreign income and asset. You have not filed the return, which you have to file the return because law says that Income Tax Act says that you have to file the return. But suppose you have not filed the return, then guys, there will be a 10 lakh penalty. Suppose you file the return, but you failure to furnish the information in return of the income or for the furnishing inaccurate particular about the asset located outside India. Suppose incorrect information you have given, or you have not given the information at all about the foreign asset and all, then guys 10 lakh penalty is applicable. So first is guys, in case of your black money, whatever the tax, on that tax 3 times is a penalty, that is as per section 41. Suppose you have not filed the return, then there is a penalty of 10 lakh rupees. Here, like you file the return, but you have not disclosed the foreign asset or foreign income, then guys 10 lakh rupees penalty. Now default in the payment of the tax arrear. So whatever tax you have to pay to the government, suppose you are not paying the tax, then guys 100% of the tax arrear will be the penalty. Now failure without reasonable cause to answer any question put to him by the tax authority or to sign any statement made by him in the course of any proceeding under the act, or to attend or produce books of accounts or document at a place or time in response to summon issued under section 8. So guys, suppose you have not answered to the department send you some notice, you have not answered them in that particular case, or suppose you have not made the statement or you have not attended the, like they ask for the books of accounts, you are not producing the books of accounts, then there will be a penalty of 50,000 to the 2 lakh rupees. So here will be the penalty of the 50,000 to 2 lakh rupees. Now guys, in the Black Money Act there are sections 6 to 88 also, and these sections are all procedural part in the Black Money Act. It is a similar to the DT part. Okay, suppose you are not satisfied with the AO order, then you will make the appeal to the CIT appeal, after that ITET appeal, after that High Court appeal, after that Supreme Court appeal. If there is a rectification, you will go for the rectification. There is a revision like a 263, 264, same is in Black Money Act, but that is not relevant for you. And ICA also not covered so all the section, they covered small some part, they have not covered all the part. Okay, so this is the completion of this part. Now directly check some question from your compiler, and guys, just do the question number 2 and question number 3. Just do the question number 2 and question number 3, and after that just read the question number 5. First do the question number 2, question number 3, and read the question number 5. Done, people. Question number 5. Question number 2 and 3 you have completed or not? Just tell me 2 and 3. Any doubt in question number 2 and 3? I think 2 and 3 were similar, now whatever we did in the compact example. 2 and 3 were similar. Any doubt in question number 2 and 3? No? 2 and 3 done, na? 5 is still pending. Yeah. So 5 we will do. Don't worry. Question number 5. All people pay attention. So there is one person, name is Mr. Deepak. Age 45 years. Indian citizen. Deepak, age 45 year. Indian citizen. Has settled in the California. So he settled in the California in USA since 2015. Prior to that, he was always been in India. So before 2015, he was in India, but now he settled in California. He is a non-resident now. He had acquired a residential property in California in 2009. So guys, can I say that in 2009 he was a resident? That time he acquired the residential property. For the USD $20,000, he kept bank deposit of USD $10,000 in the bank account in the New York since 15th April 2010. So he has opened one account in the New York and he deposited 10,000 in that account. Now notice under black money undisclosed foreign income and asset and imposition of tax act 2015 was issued on 20th October 2023. So in current year they issued the notice. Current year they came to know about this asset. So guys, can I say that current year your valuation date will be the 1st April 2023, that is your valuation date. 1st April 2023 is your valuation date. Now, the fair market value of residential property is given on the 1st April 2023, means on the valuation date FMV of that asset is given as $25,000. On the 1st April 2024, means next year value on 1st April 2024, it is given $32,000. And guys, on the date on which notice is issued, it is given value is a $30,000. Now, the bank deposit with the accrued interest thereon was $12,500 on 1st April 2023. Bank account value was 12,500. Now 12,800 in the next year 1st April, and on the date on which notice is issued, bank account value was 12,700 USD. Now USD means United States dollar. The exchange rate of Indian currency of the USD as per reference rate of RBI is given on the 1st April 2023, it is a 71. 20th October 2023, 72. And guys, 1st April 2024, 73. Compute the value of undisclosed foreign asset chargeable to tax in hands of Deepak as per the Black Money Act 2015. So guys, there are two assets. One is the residential property and one is the bank account. Can I say that residential property you acquired for $20,000 and bank account you deposited $10,000 in the year in which you were a resident, means earlier you were a resident, na? So in that year, that bank account you have opened as well as the property you have acquired, so it will be covered in the Black Money Act. Now guys, what will be the value? So can I say that residential property or value will be the whatever the cost or FMV as on valuation date, means NRV as on valuation date, whichever is higher. So your cost was $20,000 for the house property, and guys, and value as on valuation date 1/4/2023 is at $25,000. So can I say that I will consider $25,000 here? I will consider the $25,000, that is $25,000 means USD $25,000, because 20,000 was your cost and 25,000 higher comes to $25,000. So here we will say that $25,000 will be the value, and this value will be converted into the Indian currency, whatever the reference rate as on the valuation date. So valuation date, that reference rate is a 71. So we will multiply by that $25,000 multiply by 71. That will be the value of residential property. But now question is the bank account. Nidhi, there is a one interesting part, कि sir bank account. In case of the bank account, how to value the bank account? Bank account is very simple. Just take the deposit amount. So guys, whatever deposit, just consider that. Now, in case of bank account, there is no need to check that what is the value on 1st April 2023 or 1st April 2024 or like on the date on which notice is issued. No, guys, just we have to take the deposit amount. So here deposit in the bank account was only $10,000. So deposit in the bank account was $10,000. So bank account value will be considered as $10,000 only. $10,000. Now you may ask, sir, now this value of the bank account is 12,500 now due to the interest and all. But guys, that interest is not taxable now. Interest is not taxable because now he is a non-resident. Now he is a non-resident, so interest and all is not taxable. Just bank account, that asset will be considered, and in asset just we will take the deposit amount. So whatever deposit amount that we will consider, and here deposit amount is a 10,000. So 10,000 we will consider, multiply by 71 is a USD per dollar rupees rate is a 71 on the date of the valuation, that is 1st April 2023. So just check your answer. Okay, just check your answer. Just check your answer. Question number 5. So this all 5 questions we have covered from ICI material. Okay, ICI has given 5 questions, and I think in examination you will get the 4 mark question out of this 5 question or similar question to this 5 question. Just check it. Done, people? If you're done, then just say done. Okay, sir, conversion rate of bank account will be taken on 1st April. Yeah, that is the valuation date. Always conversion rate will be the 1st April of previous year. That is valuation date. Okay, Nagappan is asking one doubt. Sir, in question number 5, should we assume that the asset created in foreign land is not out of the income charged under Income Tax Act 1960 unless explicitly stated so? When they ask about the question of black money and they are sending the notice, it means it is assumed that that income was not disclosed in the India, and you have the any asset outside India that is out of the undisclosed income. Done. Now guys, in this topic there is a one small part is there, but that is not more relevant for the examination point of, not relevant at all for the examination point of view. Some meaning is given of the some terms. One is the quoted share and security, because I have mentioned that quoted share and security. But sir, what do you mean by the quoted share and security here? Quoted share and security means share and security listed in the recognized stock exchange outside India, means in NASDAQ and all. That is called quoted share and security. So what do you mean by quoted share and security here? All people pay attention. So they are saying that a share or security which has the meaningful volume of trading on an ongoing basis on the established security market and regularly quoted by dealer where they actively do offer to and in fact do purchase the share from or sell the shares to customer who are not related to the dealer in the ordinary course of business. So this definition is given for the quoted share and security. So they are saying that quoted share and security means to share or security which has the meaningful volume of trading on an ongoing basis on the established security market and is regularly quoted by the dealer, where they are actively do offer to and in fact do purchase the shares from and sell the shares to customer who are not related to dealer in the ordinary course of business. That is called your quoted share and security. But here they use the word established security market. Now what do you mean by the established security market? So here established security market definition is given. Established security market means an exchange that officially recognized or supervised by the government entity in which the market is located, and that has a meaningful annual value of the shares traded on the exchange. Now guys, it means a NASDAQ. So NASDAQ is located in USA, and USA government company is supervised that market. Government is supervising, officially recognized that market. That is called your established security market, but where meaningful annual value of the shares traded in the exchange. But question is now, okay, what do you mean by the meaningful annual value of the shares traded on the exchange? So it means, with respect to the exchange, it means it has an annual value of shares traded on the exchange or a predecessor exchange exceeding 1 billion United States dollar during each of the 3 calendar year immediately preceding the calendar year in which determination is being made. So except current year, in the last 3 years, in all the 3 years, if 1 billion United States dollar means 1 billion USD, 1 billion USD share, like value of the traded value, share value of the traded, then that stock exchange will be known as the meaningful annual value of the share traded in the exchange. So guys, this is the definition part. There is no need to remember this. Okay. Now here they mention that quoted share and security means the security which has the meaningful volume of trading on an ongoing basis. Now what do you mean by the meaningful volume of the trading on ongoing basis means? So they define here meaningful volume of the trading on ongoing basis means with respect to each class of the share. It means trade in each such class are affected other than de minimis quantity in one or more established security market on at least 60 business days during the prior calendar year. Means in case of that particular security, in the last calendar year, at least 60 business days there was a trading, except the de minimis quantity. De minimis quantity means except the small 1 or 2 quantity, just ignore that. But otherwise there was a 60 business days on which that share were traded. That is called your meaningful volume of trading on ongoing basis. An aggregate number of share in each such class that are traded on such stock exchange or market during the prior year, at least 10% of the average number of share outstanding in that class during the prior calendar year. So whatever the total number of share, average number of share, out of that at least there was 10% trading was there, at least 10% share were traded. So this is the definition part. Obviously not expecting the question from this, what do you mean by that? Okay, so this you can ignore. Okay, so this is the completion of your topic, Black Money Act. 5 questions are there. Free 4 marks you will get in the examination, and short you will get the question in the examination. This is the free marks. Just they will ask you simple question. In the MCQ they will ask you, or they will ask you in the descriptive 4-mark question from this topic, 100% sure. And out of that 5 question, any 1 question or similar question you are going to get in your examination. Okay.